All right, guys and gals, it's about that time of day again here, folks. Hope you guys had a great quadruple witching holiday. Last week was the third week of the month of March. I was off on vacation. Hope you guys had some time to rest up and get refocused here for another week here in our live trade room. Had a very good day today. Very busy, very busy. We're going to do just a short, streamlined newsletter here for you guys this evening. And we'll begin here by reminding you to make sure that you guys join our free trial. Now, when you join our free trial, you'll be able to see live recordings from our trade room. I'll give you an invite to come out and join my live trade room. That way you guys can see what it's all about to be a member of School of Trade. So don't forget to head over to SchoolOfTrade.com, join that free trial, and you will not be disappointed. All right, moving forward here, and again, just a shortened version of our newsletter here this evening. I've been really busy here, first day back in the office. But let's talk about what our reflections are for the day today. Crude oil futures this morning. Crude trading sideways here this morning. Only 30 ticks. That's right. Only 30 ticks of range today on crude. A very, very narrow range-bound day today. We ended up the day here closing up about 0.6%, 0.06%, closing print just below that big round number of 100 even. Now, we're going to grab some charts here in a few moments. We'll take a look at what we're dealing with the charts here today. But a very narrow range on crude. And what do we usually see following a narrow range? We usually see a very wide range the following day. So for all you crude traders out there, be ready for that tomorrow. Gold, what a busy, busy day on gold. Trending lower on gold, 272 ticks of range on gold today, down just shy of 2 full percentage points. Closing print just above that 1,300 big round number. Now today, we made it almost all the way up to 1,400 and then came all the way back down almost to the 1,300. You don't see that very often. Very, very wide range day. Now 272 ticks of range, that is a pretty darn wide range day on gold. So narrow range on crude, we expect to see a wide range tomorrow. Wide range on gold, we expect to see a little bit narrower range tomorrow on gold. But all of these take the back seat to the mighty mini Russell. Don't adjust your television sets. That is over 300 ticks of range today. 308 ticks of range. A little bit more than 1% lower today, closing the day 1173.7. So gold going lower, Russell going lower, crude trading sideways. Big thing right now is crude is just stuck in the mud right now around that big round number of 100. We're going to take a look at that in just a moment. Gold, very surprising today with all the concerns about manufacturing, but you can definitely tell, though, that bad weather that pushed that gold higher. Remember at the beginning of 2014 how we had that bad weather here in the U.S. and it pretty much just demolished all the home sales numbers, all the manufacturing numbers. Everybody pretty much just kicked that can down a few months down the road. Well, now we're starting to see that gold start to correct after that bad weather. And the Russell. Now the Russell, I will definitely admit, the Russell caught me a little bit off guard this morning. We saw the Russell open up inside the range from yesterday, and we saw just a remarkable amount of selling pressure right off the bat. Well, what happened was news came out of China here overnight. That was, of course, we'll talk about this in a moment, but news shook up the markets coming out of China, and then we saw manufacturing news today. So blame it on the manufacturing reports this morning for that big tumble in the E-minis. The Russell really is the one that took it most in the chin here today. The Dow and the S&P really didn't get hammered that badly. News today. This was the big deal today, guys. The news today, this morning, markets reacting to a disappointing manufacturing news reports that came out. We began this morning looking over our charts, and if you're with me this morning in the trade room, what did we talk about this morning in the trade room? Large amounts of volume, large amounts of range, going into the opening bell here in the U.S. And so if you didn't even know about that news overnight, which we talked about this morning, but if you didn't even know about that news overnight, we could tell right away that something had happened overnight because that volume was higher than average. The range, the ATR at 8 a.m., 9 a.m., 10 a.m., it was much higher than average. And whenever we see that higher volume, we're typically going to see a range-bound environment. Well, this was one of those scenarios where, forget about range bound. We always talk about there's two scenarios when you see high volume and high range at the opening bell. What are those two scenarios? One is a big move coming, and the second is a range bound day. So members, make sure you watch that opening bell analysis tutorial in the course materials so you can learn more about this. Because this morning we picked up right on this morning. High volume, high ATR, right? That means high amount of range overnight. It's either going to mean one of two things. Either we get a big day coming or we get a range-bound market around the corner. So this morning, we came in this morning, read more about that HSBC manufacturing report, the 5th month of decline and the 3rd month in a row below a reading of 50. So in China, they got some big problems right now. We got the 5th month in a row of declining manufacturing. Now, manufacturing wouldn't be that big of a deal if it wasn't China, right? We know China is, well, this is where they make their money. This is their economy. It's definitely not based on tourism, I'll tell you that much. So we know that the 5th month of decline and the 3rd month below 50, right? 50 is the magic number when it comes to manufacturing. We saw 55 and 56 today in the U.S. news. So this is what got everybody all worried about manufacturing. Well, then you fast forward a few hours, now you go to 9:45. This is what caught me off guard a little bit. It took me a few minutes to pick up on this morning because it just literally took off to the downside at 10 o'clock. If you remember this morning, I took a bear flag pattern and got short on it right at 10 o'clock, kind of forgetting about the fact that we had already seen some cracks in the sidewalk, so to speak, because of the news overnight. Well, now think about what's happening now. Now the U.S. traders are seeing another manufacturing report. Now, the one today in the U.S. came out lower than expected. It still came out above 50, but it was lower than expectations. My humble opinion is the news overnight gave the reason for the U.S. traders to be worried about this. It's in the back of their minds. And then, of course, at 9:45, the U.S. session begins here with news lower than expected. Again, same manufacturing number here. Both manufacturing news, and that's what caused this big tumble. It was really amazing, though, to see that crude didn't tumble, because we would have thought crude would have picked up on that as well. But you can tell that this chess match continuing to develop in Crimea, Ukraine, and Russia. I won't even begin to speculate on what's going to happen there, but basically we know now that as of today, Ukraine was giving their military orders to get the heck out of Crimea. So it appears that that chess match continues in that part of the world. So that's most likely what's keeping crude propped up right now. So crude deals with that big round number today of 100, couldn't get out of its own way. The equities, though, if you're wondering what pushed that thing over the edge this morning, it was that little bit of a hint from China. Yeah, I don't think you can have a little hint from Chinese manufacturing, but that was what lit the fuse. And then, of course, we saw the 10 o'clock news, that 9:45 news. That's really what kind of kept that whole thing moving. Let's keep moving here. So we got just one major news event today, which was manufacturing. This day in history, always my favorite time of our newsletter. I'll be back with the full version of our newsletter tomorrow, guys. March 24th, 1603. 1603. Yeah, that's a little bit of a trip back in time. How's that for a throwback Monday? Queen Elizabeth I dies at age 69 after ruling England for more than 40 years. Now, guys, 69 is a pretty darn ripe old age if you're in the 1600s. I believe, correct my math here, but I believe that Queen Elizabeth I, she was 3 times as old as the oldest person around her. So pretty remarkable, pretty remarkable. She must have done a lot of yoga at that age. I would imagine they had yoga back in the 1600s. I'll check my facts and get back to you guys tomorrow. A little down dog there, never hurt anybody. March 24th, 1958. Gotta love this. Gotta love this. A different time, right? Joe DiMaggio, all the Cal Yastrzemskis, all the amazing baseball players get shipped off to war. Elvis Presley joins in the party. 1958, rock and roll star Elvis Presley. You know who that is, right? You know who that is. The Hound Dog, baby. He joins the Army for 2 years. 2 years, 1958 through 1960. Hard to tell what they fed him over there. They probably didn't give him the average lunch, did they? 1989, this is a sad day in our U.S. history. The oil tanker Exxon Valdez. Now, I was just about, what was that, 7, 8 years old at that time. I remember watching the news media report on this, and I remember not really thinking much above it, but spilling 240,000 barrels of oil. I wonder what happened to the price of crude oil during that time. I should go back and take a look at that chart. If anybody out there has the data going back to 89, check that out. I'd love to see what happened the day after that Exxon Valdez runs aground, spilling almost 250,000 barrels of oil, one of the worst spills in the last 75 years. And a very interesting, and this goes to show you that big pops equal big drops. March 24th, the year 2000, the S&P hits record high of 1527. Yeah, nothing we're dealing with now, right? Here's the amazing part, $13 trillion in value. It then loses over the next 12 months. Remember, the year 2000, dot-com bursts. We lose 25% over 12 months, losing over $2.5 trillion, right, in speculatory sell-off after that record high in late March 2000. And you can see there this day in history. News for tomorrow. Getting ready for tomorrow. We've got some big news coming out in Europe starting at 5 a.m. I've got news from Great Britain. I've got the UK. I've got, I believe it was France and Germany all have news starting at 5 o'clock, 5:15, 5:30 tomorrow morning. So be ready for that news tomorrow. 9 a.m. tomorrow morning, we've got our home price index, the old Case-Shiller home price index. But the big news tomorrow is this 10 o'clock Red Star News, 10 o'clock new home sales. Now, remember, we already saw this morning that manufacturing report that we saw at 9:45, clearly we have shaken off any weather-related weakness. All those realtors out there, though, they've been telling us that these new home sales, now new home sales, of course, will be home builders, right, brand new construction homes. And we've got home price index, right, that'll be published by the National Association of Realtors. So everybody's been blaming it on the rain and the snow here in the U.S. We'll see tomorrow morning at 10 o'clock if that rebound is indeed happening. I'm looking forward to seeing what this next few months look like. We might see one of the biggest rebounds in home prices in the last few years because we really got our butts kicked by that bad weather in the early 2014, which really demolished all the numbers, and it's what led to that big profit taking on the E-minis beginning of the year. Let's run over some charts here. Now, again, we'll go back to our normally scheduled program tomorrow, but we'll jump right back through our charts here now, going right on through, starting here with crude oil. And as I start here with crude, I can see that we had an inside day today, closing price in the middle, volume in the middle, everything neutral here. 2-day range is sideways, opens inside, everything here neutral, 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 and neutral. The big clue here, though, was this very narrow range. This very narrow range. Now, what do we always think about a narrow range? A narrow range is a big clue for a much larger range coming out tomorrow. I'm looking to be bullish with an opening print tomorrow above 129. I'm bearish with an opening print tomorrow below 99.34. So keep an eye on those highs and lows. If we open up above, we're looking for buys. Nothing guaranteed, obviously, but if we open up above, looking for buying opportunities. Open below, looking for selling opportunities. And keep an eye out below us here. We got 98.09, 97.64. That could easily be some targets for us tomorrow. Again, really narrow range here on crude, so I would expect this to be a much wider range tomorrow. Now, here is the big culprit here, folks. Here's the big culprit. Big round number. Now, remember, the 100 big round number is what all the granddaddy big round numbers tell all the little kitty big round numbers to be careful when they get older. Right? Be careful of that big round number of 100. They don't do their homework on time, right? They're always out back smoking cigarettes, coming in late after curfew. So we've known about, I'm kidding with you guys, we've known about the 100 big round number is always going to be one of the more nasty areas on the chart. As I was joking around before, all the other big round numbers, yeah, they all thumb their nose at this big round number at 100. So be careful. And you can see here we get above it, we get below it, and it looks like we are trading sideways here right now on top of that big round number. Most important thing we can tell you right now is this big round number. If I can see that big round number within my striking point, I've got to fade the breakouts and use that big round number as the magnet. Let me show you here though. No, that wasn't the chart I wanted. There we go. Take a look though at the faster of the anchor charts, and you can see we have been trending higher here on crude. However, double top, as you can see, about that 120, double bottoms here in price. We're going sideways right now. We had that very easy to spot today, trading sideways. Now what I want you guys to do is err on the side of caution. I'm going to be buying this 99.19 to 98.93, buying the 98.56, 98.34. I've got profit targets overhead here at 117, obviously the big round number. All right, so keep an eye on that. I will be looking for buying opportunities here right now on crude with this chess match in Crimea, with the concerns over the manufacturing sector. We've been balanced, right? We've been balanced. The issues happening in Russia will be bullish for crude. The issues happening in China will be bearish for crude. So again, stay away from this big round number of 100. As price goes lower, I'm buying the 99.05. I'm buying the 98.93. I'm buying the 98.56, the 98.34. Now we go to the next chart here, and you can see here we got some targets for you. Buyer's targets overhead. Again, I will take profit here at the 100.06. That's going to be my target here for the buy. And then as we keep going, I've got targets overhead here, 101.21 and 101.78. in addition to the top of this channel. All right, so you can see that top of that channel. That may sneak right up on you here if things get a little bit out of control here going to the upside. So looking sideways here in the short term, I'm going to err on the side of bullish by buying the 99.19 and of course taking our profit targets up top there at 101.21. Moving forward here, down to the gold, from the black gold to the gold. Looking at the VIP chart right now, and again, all these charts are posted for you below today's video. We saw a big gap down, so big gap down here overnight, or not overnight, but in the pre-market. This is what we saw this morning. We saw this big range, this large amounts of volume, and that gap down. That's what gave us the clue that we need to be looking closely to see what happened overnight. Opening print lower, bearish. Closing print at the lows, bearish. Volume. Now here it was, I think this is the biggest clue we got all day. There's my prior week low, right? So there's the prior week low right there, 1320.8. Now forget about the price. Show me volume. Volume spike here. So I've got volume at 1318. I got volume at 1311 where we closed the day today. The key is that when you look at the volume print on this, the volume prints are below the prior week low. Now, definitely, you look back in time here and gap up, gap down, gap up, gap down. As you can see, it's been a roller coaster ride on gold. But again, all I can use is what I'm given here. So the volume analysis, I think, is the most important thing here this morning or this evening, below the prior week's low. The 2-day is lower. Again, everything bearish, 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 bearish. The range is relatively typical on an open and close chart. If you were to include the entire overnight session, it was a relatively wide range. But you can see here, though, a relatively typical range. By the way, kids, if you're following along at home, would you call that range narrow or that range very wide? Yeah, I'd call that range very wide. So with that range being wide, it's a Monday. I'm sorry, guys. Did I mention it's a Monday? With that range being very narrow, excuse me, now that luckily I'm not an English teacher. That narrow range, look at what it resulted in. almost 300 ticks of range in the following session. So remember, when you see a narrow range today, look for that wider range tomorrow. Real important though, everything bearish here as we go down. Tomorrow morning, an opening print above 24.5. I'm looking for buys. Tomorrow morning, an opening print below 1308.5. I'm looking for sells. Nothing guaranteed, but an opening print below, I'm looking for shorts. Opening print above, I'm looking for longs. And if we do end up going higher here, we can pretty much guarantee we're going to be running right into that previous range up here, 1340 area. So be ready for buyers if we can get back above that prior week low. That's your gold here, guys, on your VIP. Here's your anchor chart. Now you can see here's gold all the way almost up to 1400 and then almost all the way back down to 1300. So a very, very wide range today in the 24-hour session. As you can see here now, we go up, try to keep going, collapse right back down in. We've got this convenient little trend line here right now. And so all the signs point to bearish control right now on gold. But here's the problem. Look where I am. I'm at a discount. I don't want to sell at a discount. I want to sell at a premium. So I'm looking to sell short here on gold, ideally here at the 1350 area. Be great to be able to sell this bounce and then continue it going lower, taking profit here at the profit zones you can see below me. All right, so that would be the ideal scenario. Ideal scenario here would be sell that 1350 and then take your profit 1340, 1314, 1287. All right, make sure you got that big round number on your mind there. And then, of course, as we go to our faster anchor, we already know we're bearish. But again, the most important thing on gold is that we are bearish, but very important though, we're priced at a discount. I cannot be confident and sell at a discount. So what I'm going to do is I'm going to try to sell the 1317, the 1325, and if I have to, the 1335. So just like we said on the anchor chart before, I would rather get short at any of these opportunities here above me. I never like to sell the lows. I always like to sell at a premium. So as this price has gone lower, wait for price to retrace. I'm looking to get short here, 1317.6, and I've got targets at 1301 and 1289.6 on the way down. So I'm not selling here immediately. I'm going to sell here once we get that retracement so I can sell it at a discount, right? Wise traders never sell at a discount. They always sell at a premium, So I want to sell it at a premium. And as we keep going here, down towards the Russell was an incredible move here this morning. Opened up inside the range. We immediately left the opening range this morning. Got a very strong clue for bearish personality, and it was just wave pattern short on the way down. We opened up inside the range, which was a neutral inside opening bell. So we didn't quite have the conviction of the sellers taking over until about half an hour into the day today. It wasn't until, if you recall, 10 o'clock when things really starting to get ugly. And that's exactly when we got short in our trade room this morning. It took a little bit of time because when we opened up inside yesterday's range, we have to wait and see who's in control. Now, we closed, of course, down near the lows. That's bearish. Volume. Now, here's another clue. Volume here below the previous week low. A very bearish clue there on the mini Russell. So volume is bearish. Closing print is bearish. Two-day relationship is bearish. But here's a big red flag. A very wide range today. We had 308 ticks of range here today. That is way outside of the average. And so whenever we see a wide range today, we're normally going to see an inside range-bound day tomorrow. So Joe, how do I capitalize on something like that? I capitalize on that by looking for a range-bound market. I'm going to have to put my seal of approval on it tomorrow morning at the opening bell. So together with my students tomorrow in the trade room, we'll watch the opening bell. Assuming the opening bell opens up inside today's range, and assuming that opening bell analysis tells us we have a range-bound market, I then will take out my reversal patterns, looking for price reversals, buying the lows and selling the highs. So the way in which you trade this to make profit on this scenario tomorrow is you're expecting to see a range-bound market. But remember, you can't guarantee anything until you see the opening print tomorrow morning. So around 9:45 tomorrow, if we're inside the opening range, if we see very light volume, and if we open up inside today's range tomorrow morning, I'm going to be suspicious of those fake out breakouts. I'm going to buy lows and sell highs. Now, if this little sell-off continues here overnight, I'm looking to get short here below 1163. I'm bullish. I'm looking for buying opportunities at 1193.8. All right, so be aware. I doubt we're going to see price open above, but I can never say never. I'll be looking, though, for price to open up below this 63 even, because that's definitely going to be a very, very big sign of things to come. I'm expecting to have price open up inside the range tomorrow morning, but I hope I'm wrong. I hope the market catches me off guard. I hope we sell off tomorrow again. I don't care whether the market goes up, down, sideways, as long as I find the right pattern to trade it. Look at this Russell anchor chart. Yuck. It is not looking very pretty here right now. There's that 1200 big round number that we keep flirting with, but you can see here, though, higher lows, lower highs. We call this a price wedge, as if we needed anything else to be looking for tomorrow. So guys and gals, buy these lows, sell these highs. I'm buying the 68s. I'm selling the 1200s, right? Buying lows, selling highs, buying lows, selling highs, buying lows, selling highs. If we happen to get a chance to sell off, I've got targets down here. As you can see, plenty of them listed. You should be able to get into a short here below 25.2. All right, but I'm going to have to wait tomorrow morning. I want to see what this personality looks like if we end up going lower. Again, I'm not expecting much. I'm expecting to stay inside of this, but again, if we do happen to open up tomorrow, higher or lower, we'll use the opening bell analysis tomorrow to look for clues from there. As if we need one more clue here on the Russell, we get a big, big, strong trend line there as resistance. We have apparently gotten stuck here on the Russell between the two key moving averages. All right, members, you guys should know what those are. We've got resistance here overhead, support levels below us. As of right now on the Russell, the only thing that I can recommend we do is to buy that 65, sell that 78. Again, you're buying at support, you're selling at resistance. Until we see a stronger trend, until we see a better clue tomorrow morning. But again, I keep going back to that opening, to that range today, that big wide range today. Unless this thing turns into an absolute sell-off here tomorrow, I don't expect to see much more here in the next 24 hours. So everybody needs a break after running a marathon like the Russell did today. So buy lows, sell highs, but the minute we start picking up on a trend being developed tomorrow morning, we're going to try to trade with that trend. But right now, all we can do is buy lows and sell highs. Now, I want to thank you guys so much for spending your time here with me this evening. As you can see here, we've posted all of our charts on our blog here this evening. Thank you so much for coming back and joining me here today. Hope you guys had a great quadruple witching break. I know I did. We got a bunch of new materials ready for our students at School of Trade. And as always, don't forget to join our newsletter. Make sure you join our free trial. If you haven't registered for the newsletter, you can do so right on the left-hand side here today. And don't forget, head on over to SchoolOfTrade.com and join that free trial. You'll be happy you did. Thanks so much, guys and gals, for tuning in tonight. I'll see you same time, same place tomorrow. Signing off now from our corporate headquarters in Los Angeles, California. My name is Joseph James. Adios, amigos. Bye-bye for now.